Hey everybody, Josh Sigurdson of World Alternative Media here, and we are joined once again by Tim Picciott of the Liberty Advisor, and we've been talking about repo for a long time. There is more news coming out of the Fed as they made a really boring statement today, but there are some interesting takeaways from Jerome Powell's statement. As this article by Zero Hedge says, Fed extends temporary, in quotations, repo operations from January to at least April, hikes IOER. And as the article goes into, while the Fed's January statement was a snoozer, with the only difference from the December statement being the downgrade in the pace of household spending rising at a moderate versus strong pace, there were far more notable changes in the latest monetary policy implementation note, which, as many expected, saw the rate which the Fed is paying on excess reserves, IOER, hiked by 5 basis points to 1.6%, or 10 basis points above the bottom of the target range for the federal funds rate, which is currently at 1.5%. The other notable change from the December meeting is that the Fed is now extending its duration of its repo operations, which in December were supposed to conclude in January 2020, to at least April 2020. And while there was no comment or change to the Fed's QE4, it was this extension to the deadline of repo that boosted stocks in knee-jerk reaction, as it means the Fed continues to believe the crisis situation that emerged after the September repo crisis will continue through at least April, even though repo rates have long ago stabilized. The committee also directs a desk to continue conducting term and overnight repurchase agreement operations at least through April 2020 to ensure that the supply of reserves remains ample even during periods of sharp increases in non-reserve liabilities, and to mitigate the risk of money market pressures that could adversely affect policy implementation. Anyway, breaking out of that, Tim, can you go into the latest statement by the Fed and what your thoughts are on this extension of the repo madness going into April 420, as it would be, and where you think it might be going from there, because it doesn't seem like it's ending anytime soon, and it appears that they don't really quite know whether or not they're in crisis mode or whether everything's all smooth and calm in the water. What do you think?
First off, a boring statement by the Fed, you don't say. I mean, I can't believe it that they have a boring statement. I mean, their main goal is to say, the most amount, to say the least in the most amount of words possible. That way the average person, just sticks to whatever bread and circus that they're currently engaged in. But I mean, pretty much everyone watching this who pays attention, and certainly, yourself and John as well. I mean, everybody knew that as soon as the Fed said that that they were going to launch this, that we knew that there was no way they're going to stop it. I mean, I think initially, this was only supposed to go on. I can't remember the initial BS they came out with. Like, it was supposed to stop like the second week of October. Then it was, then it was like the third or fourth week of October. Then they're moving it back to November, then December, then January, then now April. And then now, guess what? It's not going to stop. So it's going to keep going on. They're going to keep lengthening the maturities. This used to just be an overnight thing. Now they also have, 14-day ones. They've got 32-day ones. I know John, SNEISEN'S has been just a machine, covering this, every single day of what's going on with the Fed. But I also want to point to people to what Jerome Powell said in June, where he effectively said the unconventional is the new conventional. And so there's a lot of unconventional things that the Fed is talking about doing. One of the things the Fed just came out with the other day, like 3 days ago, said Fed officials weigh new recession fighting tool, capping treasury yields. So what they mean is, let's say hypothetically, they don't want yields to get above 2%. I'm just making up that number on the 10-year. So what that means is that if their new tool is to not let it go above 2, then that effectively means that there is no limit to how many bonds they can buy, because the amount of bonds they will buy will be the amount of bonds that it takes for them to artificially manipulate that rate below 2%.
Right.
Now, what this means from like a retirement planning perspective or investment perspective, I mean, they basically are damned if they do, damned if they don't. I got in trouble for writing this in an email in 2011, knowing that this would be the case. So let's say you've got, $1 million, you're in a 10-year duration bond, which is not the same as a 10-year bond, but your duration's 10 years, $1 million, rates go up 1%. Now your underlying principal is $900,000. Now you'll still get your, measly, whatever it is, 1.6, 1.7, 1.8% interest every year. But but by the time you get your money back, all the horses are going to be out of the barn. So if rates go up 2%, which is not, crazy in a free market, I mean, rates would go up way more than that. You're looking at like 780,000. And so the problem is that with all these pension funds and big, mainly it's the pension funds, but if they have so many assets that are in bonds that if the rates were to go up, then the underlying values of their bond portfolios would absolutely crater. And then if they had to then, not if, but when they have to then liquidate to then pay out the retirees, then since they would be taking from so much principal and they're hardly getting anything in interest, it would just devastate them. So they damned if they do, damned if they don't. This is why, last year, right around this time, we had Tom Hegna, who's one of the top retirement experts on, and I think we called it the debt hurricane, and we said that the rates were going to stay low forever. I know we did a report, sometime last year where we talked with Larry, or not, we didn't talk with Larry Kudlow, but Larry Kudlow had a statement, that's Trump's chief economic advisor, said that rates are never going to rise again during his lifetime. That's something, people, were laughing at us, at the time. Another thing that I want to bring up, and where the Fed could get themselves in trouble, and my question actually snuck by and made it to Janet Yellen a couple years ago, and actually Peter Schiff actually referenced it on his show, and he's like, yeah, it was a pretty boring Fed meeting. Yeah, it's funny, anytime someone talks about the Fed, it's a pretty boring meeting. But he goes, yeah, it's a pretty boring meeting, except for this one question that snuck through, and the one question that snuck through was my question that made it to the congressman. A lot of inside baseball that would really probably bore the audience and leading up to it. But anyways, it gets down to the crux of, we are paying the banks 1.6% to not lend money out. Now, my question was, and this was back when the rates were, pretty much near zero. I'm like, well, what if we get in a situation where we're only collecting, like 1% from the banks, but then we're paying the banks 1.6 in interest? I mean, effectively, then the Fed would have negative cash flow. Because what people don't realize right now, and I'm trying to remember the exact number off the top of my head, because Josh and I just do this, and as he's talking, I'm jotting down notes. But the Fed right now collects, I believe, so let's say of all the interest, all that the Fed has, they keep, they spin it as, they give back 94% of the profit to the Treasury. So every year the Fed keeps 6%, which is, instead of saying they keep 6, they spin it as we give out 94. So my question was, well, if you're in an environment where the underlying bond portfolios are collapsing because rates are rising, then now instead of actually making money, you're going to lose money. And so are you going to send the Treasury a bill? And Janet Yellen actually then said that my question was mathematically impossible when, like an alien invasion is technically possible. And I guess maybe Paul Krugman's hoping for that, because that's
broken windows.
That's what he said would boost GDP. And so there's all these, we've gotten into the situation where there's no way out of it. They just had to keep rolling it over. And then you've got other guys like today, Bill Dudley came out, the former New York Fed chairman. I mean, and the New York Fed's really the one that runs the show. And he came out and said something to the effect of, there's no link between the Federal Reserve activity and the stock market. We had Neil Kashkari, the Minneapolis Fed chair that you and I covered on our most recent video, right, where we had talked about, all these, in his exact words were all these QE conspiracists, which is very funny because, I thought that it was a conspiracy that this was even going on to begin with. And now you're admitting it's going on, but yet we're still the conspiracists. But so, this is just one gigantic global race to the bottom. Trump tweeted, I think the other day he tweeted out like 140 times, but, he tweeted out yesterday that, that we need to have the rates need to get lower. And I know several times he's tweeted about that, but, he keeps, drumming, banging the table on this because he knows that there is a link between the Fed funds rate and what the Fed activity does in the stock market. They all know it, but and I think they even know what you and I know. They just know that their job is to be a cheerleader, and then when they leave the Fed to get some big time private equity job, like I forgot what's his name, Osama Ben Bernanke is working at today, but he's at some like Bain and Cap. He's at some big hedge fund.
Yeah, well, that, or you could be someone like Krugman and teach a master class. And as someone may have said recently to me in a private message, which I find hilarious and I need to make public, is that Paul Krugman teaching a master class is like Luke Rudowski teaching a class on grammar. But and it's true. But look, there's a lot to be said about people like Kudlow, who you mentioned, talking about a potential recession in 2021 or 2022, which he said early last year. It's hard to really pinpoint exact dates on things like that, and I think it's irresponsible to do so. But with that said, we're coming up on that timeline. time goes by and eventually, these things come to fruition, and he could be very much right. But I actually think that as we've gone into so many times, we've been in a recession since 2008. It just never recovered. It just, it's papered over. But I want to kind of wrap this up slowly but surely here, Tim. Where do you see repo operations going in the next year or so? It seems like there's a good chance that in April the Fed's going to make some announcement and say something along the lines of, oh, well, you know what, we'll just push off this so-called temporary, I don't even know what the word temporary means anymore at this rate, but temporary repo operations to like September or something like that. What do you think?
Well, I mean, the income tax is supposed to be temporary, and we still have that going on. So
wartime measure.
I mean, I'm from upstate New York, and there's a throughway that was supposedly like 40 years ago was supposed to be paid off, and then it was going to be free. And guess what? Every year the tolls and that keep going up. So anyone who's driving on the 90, so I mean, I think it's going to be as temporary as that. I mean, there's never any government program or government. Essentially, this is free money to the banks. It's basically a stealth bailout for the banks. And I'm not sure how much we've covered this, but what is going on so the Treasury needs to issue new debt, and what's going on is then the big banks, the big mega banks, too big to fail mega banks, then have the primary dealers then buy that debt. And now what's happening is once that debt settles in like a day or two, then the Fed is then coming in and then buying that debt, and you can track it through the QSIP number. So we're not just QE conspiracists. I mean, you can actually, I know how to do this stuff. You can track what is actually going on. But if let's say you buy a bond for $100, and then you can come and sell it right back the next day to the Fed for $101. I mean, I'm just making it up. But when you're dealing with billions and billions and billions and trillions of dollars, it starts adding up. And that in and of itself is a secret stealth bailout, because effectively the banks get to then front run the Fed because they know the Fed's going to, always be up there to buy it. Because, I mean, who really even caused this repo crisis, allegedly, is going to be JP Morgan, when they took a bunch of their assets that were in shorter term notes and more cash kind of reserves, right, and flipped it over to a little bit longer term bonds, which now didn't have the same classification as the shorter term notes. So they didn't have any money to lend to other banks. Mm-hmm. And we know, obviously, Jamie Dimon, or Jamie Dimon, as we like to call him, is not a big fan of Donald Trump. And so who knows? These people, they're also probably gleefully, looking at what's going on with this coronavirus thing, because what they're saying is, I forgot, there was a Zero Hedge article, which I think I have it up right here, that says, okay, markets jump on hopes Powell will provide monetary vaccine to viral pandemic. And so they're just looking for any excuse they can. This is going to be a permanent program, or they're going to do something where maybe they'll roll it into like a 1-year loan. And, right, and so just basically so it's like, imagine if you have $100,000 of credit card debt, and then, you're able to borrow money from your parents every single night, and then you pay it back. This is going on every single night. And that's sort of what the Fed is doing. But then they started getting 2-week loans, and they started getting 1-month loans. And then who knows, maybe they'll come up with like a 1-year temporary term repo. But, right, it's just making these banks that are insolvent solvent again. And yeah, this is definitely, I would bet a lot that this is not going to be temporary, unless it's to maybe try to get Donald Trump out of there, because I know they're not big fans of him. But yeah, this is, how many government programs have ever been instituted?
It's gotten so absolutely out of control. I think actually the problem is it's in control, but I feel like they're scrambling. The worst part is that it comes down on the heads of the people watching this video, and inflation and the vast amounts of printing of this currency. It's fraudulent. If people realize how much of their taxes went to paying off the interest on the debt, they would be rioting in the streets. But anyway, we're going to wrap this up from here. For those that are interested, you can become a client of Tim's by checking the link below. We have a bit.ly link in the description, as well as the comments. Obviously, he is a financial planner, and you could look into that. Go to the libertyadvisor.com and all that. Everything's linked below. So anyway, make sure to check that out. Also, check all of our other links. Get your F the Fed shirt and your End the Fed shirt if you want. And we got lots of merchandise on our Teespring store. Anyway, finishing it up, at the end of the day, it all comes down to you as free individuals being self-sufficient and independent, and not succumbing to the debt servitude that is so often bestowed upon the public by these fraudulent central banks throughout the world. Doesn't matter which country you're in. We are dealing with this monolithic beast that is enslaving the populace via debt and the enforcement of usury under the social contract. Usury voluntary isn't necessarily a bad thing. If it's voluntary, you sign a contract, you get a loan, whatever it might be. I wouldn't say it's the best idea, but it's not a terrible thing. But when we're talking about the social contract, it's not something you ever sign. You're basically just in this slave racket that allegedly, as a baby, as you were born, you signed some contract and signed away your rights. It's insane. It's absurd. And it is extremely restrictive to the prosperity of the populace when people are forced to, pay off this interest on the debt, when people are pushed into poverty, when you have, back in the 60s, one father going out and working for a family of 6 and being able to provide food on the table. And with inflation, the prices didn't go up, the value of the currency went down, and then you end up with 2 parents working 2 jobs at the same time in places like California, for example, and they're living out of a van. It's crazy. So this is really important.
Father in California, though, so I mean that would be very upsetting to people who don't have mothers and fathers. And everything you're talking about, the social contract, there's a book by Lysander Spooner, No Treason, The Constitution, No Authority. I'd highly recommend that because it really brings up a lot of ideas that Josh talks about. But if people are new to this stuff, they might not necessarily know it. But I think Lysander Spooner is a great person for people to be aware of.
Yeah, absolutely. I agree. And Bastiat and a lot of those people. I really appreciate everyone watching today. As per usual, write in the comments, end the Fed, and it'll help us know that you've watched to the end. It'll also help us know that, or it'll help the algorithm. Make sure to press like on the video. Liking and sharing on social media make a big difference because YouTube doesn't show most people our videos anymore. Those links below, you could help us out in many ways, as much as just donating $1 or more a month with Patreon or Subscribestar, or looking at GoFundMe, a little donation or something like that, a tip in crypto. There's a lot of options. Float.app, flote.app. At the end of the day, just be self-sufficient, independent, free human being outside of this centralized slave racket that people have been pushed into for far too long. It comes down to you good people to break free. So I really appreciate everyone joining us today. We will be back at all of you with much more. But until next time, this is Josh Sigurdson and Tim Picciott signing out from World Alternative Media. Find the truth. Be the change. Like what you see here, Wham? Don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely, extremely appreciated as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime as we prepare for the next big step is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan, if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale, so make sure to find us on float.app, that's flote.app, at Josh Sigurdson, as well as at Wham, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best Liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are two major events coming up that we are extremely excited about, and you can use promo code WHAM, that's WAM, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.